This show contains discussion of general investment strategies for information purposes only and should not be construed as investment advice. Diversification cannot eliminate the risk of investment losses.
It's time for the Money Puzzle Podcast. With good conversations and realistic solutions to the money puzzles we all face every day. Join your hosts, chartered financial consultant and financial advisor Robert Edgin and financial advisor Brian Johnson to learn the money tips and tricks you need to achieve the financial confidence you deserve and the future that you dream of. Now let's get this show started. Hello and welcome to the Money Puzzle Podcast. I am Robert Edgin and I'll be your guide for the ride for the next few minutes. This is the place for candid conversations about money, finance, investing, and all of the other pieces of the money puzzle you need to figure out so you can have the financial confidence you deserve and the
future that you dream of.
That's right. And this is episode number 60, if you can believe that or not. I don't believe it either. Today we are talking about something that is way more awesome than people give it credit for, and way more important than people think it is, your auto and property insurance.
Something everybody hates to talk about, but everybody should know about.
Absolutely. And here to help me spice up the insurance conversation is business partner Brian. Thank you for driving down from the Denver office. We haven't been in the studio much together.
No, we haven't. This whole craziness.
COVID. Yep, that's right.
Kind of threw everything off.
We've been doing Zoom meetings like crazy.
Yep.
But yes, it's great to have you in here. Now, Brian, this is going to sound crazy, but I truly do get excited when I'm talking about insurance because I've seen crazy things happen over the last couple of decades that we've been in this world, right? Where the right insurance has literally saved people's financial butts.
Yes.
Right. So I know how important it is. And since you are required to carry insurance pretty much in every state in the nation, we need to know how it works, and we want to give you some tips on how to make sure that it is set up right, but also how to save some money, get rid of some things you don't need without jeopardizing the important things that your insurance does for you.
Right.
So, all right. So I'm looking forward to getting in that conversation. But Brian, before we do, I do a lot of reading and research, and I come across different financial news headlines that catch my eye. So I thought we would take a minute to look at some news.
All right.
All right, this week's article comes to us from abc.net, but actually out of Australia.
Oh.
And the headline reads, Talking Toilet Inventor Flushed with Success. I know, it's a great headline. It makes you want to read it. Brian, you're going to like this. So, a German inventor, this is from the story now.
I thought it was in Australia.
It is in Australia, but they're talking about a German invention because the invention was just getting to Australia. A German inventor who developed a gadget that, according to the article here, berates men if they try to use the toilet standing up, has sold more than 1.6 million devices so far. The inventor's business manager says. According to the article, German women fed up with a man with poor aim can turn on the ghost-shaped gadget, which lurks under the toilet rim, and if the seat is lifted, it berates men in a stern female tone. This is what I love about the story. Listen to the berating here.
Right.
Hello, what are you up to then? Put the seat back down right away. You are definitely not to pee standing up. You will make a right mess. I don't know. We berate people differently here in the U.S. than they do in Germany, because that is not at all the way my wife would talk to me if she wanted to yell at me for peeing standing up. Alex Bankart, 46, who invented, it's called the WC Ghost, the water closet ghost. And it's created, they're all in negotiations because they're bringing it now also to Britain, Canada, and Italy. So,
well, as long as it doesn't come here, but I did see a show on Netflix. I gotta say Netflix. It was a $1 million beach house. Have you seen that yet?
Yeah, I've seen the show. I've not watched it.
There was a toilet that would open up and then turn colors for your mood.
So how does the toilet know your mood?
You should see it. I don't know.
Well,
it was an interesting show.
We'll get that guy inventor together with this inventor. If it's red, it'll yell at you.
I guess.
If it's green, it'll give you positive encouragement, but it'll talk to you. So if you're having problems with your guy peeing standing up and having not a right aim and causing a right mess, you can check out that article, maybe buy one for yourself. I've got the link in show notes, but that's it for the news. Let's go ahead and get to today's hot topic. All right, so today's hot topic is all about insurance. And this is happening because I was actually visiting with a young financial planner last month who had recently graduated from college with a financial degree and was getting ready to sit for her CFP boards. Now, that's the Certified Financial Planner boards. That is a crazy hard test.
Yes, it is.
You know, you spend months planning and preparing for it, and it is to cover all things financially related.
You would think.
You would think, right? So I'm talking to her, and while we're talking about life and finance, she was telling me that she's getting ready to move into a new apartment. And for the first time, she's got to get renter's insurance.
What the heck is renter's insurance?
Well, I said to her, what do you mean for the first time you have to get renter's insurance? And she said, well, I've never had any renter's insurance before because I don't really own much, so I don't need it. And this really caught me off guard. I said, well, what did they teach you in the Certified Financial Planning and in your financial degree courses about insurance? Nothing. So I thought, okay, if this person, a very bright, intelligent, she's got a college degree, she's getting ready to be a CFP, if she doesn't know how insurance works, so we had a conversation about insurance, she really didn't know how most of it worked.
Well, and she works for a large financial planning company, right?
Yes.
Large.
Yeah.
And they don't know.
And they don't know, right? So we need to make sure that you understand how insurance works because it's very important. You can get it wrong and screw things up. You can get it right and it can save your butt.
You can, absolutely.
So, you know, why do we need to even talk about and deal with insurance in general? What is the premise of insurance? It's all about removing or transferring risk. Right, Brian? Yep. Insurance companies are there so we can pay them to assume some risks for us. And kind of the way that, we just explained it or I explain it is that you write your insurance company a little check every month and then they write the big checks if a problem were to arise.
Exactly. I mean, what if you burnt the place down? How does that work?
So, yeah, that's right.
Seriously, what if I left the stove on in my apartment and I caused a fire?
We're going to talk about that.
All right.
But that's definitely, and that was actually the question that I had for this young CFP.
I did not know that.
So that was how we started this conversation. But the magic of insurance that people don't get is you can go visit your insurance guy or gal or get online and get some insurance. You can make your first payment for renter's insurance of $15 and then burn the place down immediately after you're done with that conversation. And they're going to cover hundreds of thousands of dollars worth of damages that you would have been responsible for.
If you did it right.
So if you did it right?
Exactly.
So we've got really about 10 things to blitz through when it comes to insurance. 11 things actually, but they're quick and easy and you need to get them. So number one, I get this question all of the time when it comes to car insurance. What does full coverage mean? And do I need full coverage or liability? Because most insurance people just say, do you want full coverage or liability?
I never do, but yes, a lot of people do.
A lot of people do. Well, really, what you need to know is that full coverage means that you have comprehensive and collision coverage on your car.
Right.
Comprehensive coverage, let's start with collision coverage. That's easy. It's from colliding with something. Collision.
Right.
Only people on watching on YouTube just know how fun that was.
That's right.
So, if you have collision coverage, that says if you collide with a tree, a curb, another car, it is to fix the damages on your vehicle.
That's right.
Comprehensive, or some insurance companies call it other than collision, is to fix non-collision things for your car. Hail damage.
Number one here is hail.
That's right.
Where I live, number one is more hitting a deer.
So that's correct. Deer, which even though that is a collision, when in the insurance world, that's considered comprehensive.
It's because it couldn't be avoided, right? Because sometimes those deer in the middle of the night go running out on the road and you hit one.
But full coverage just basically means that you are covering your vehicle. Right. And if you have a loan on your car, then they require that you have full coverage. That's what it means that you're carrying or covering your vehicle. If you've got an older vehicle and you don't care what happens to it if it gets destroyed, then you just carry liability coverage.
Yes.
So that's full coverage versus liability. Number two, the importance of uninsured motorist coverage.
Huge, especially if you're involved in an accident and you're seriously hurt.
That's right.
Okay.
Yeah. Uninsured motorist coverage is also underinsured motorist coverage.
Well, I mean, think about it. Think about this. One of my clients probably 6, 8 years ago, I can't remember exactly when, was showing a piece of real estate up in one of the mountain towns, and a car went off the road onto the sidewalk and hit him. Did he have coverage?
Yes.
Yeah.
Under his
underinsured motorist bodily injury. That's right.
Now, first thing, they should have some coverage under the other person's liability.
They did, but he had layup time and missed a whole bunch of work.
So that's right. So uninsured motorist coverage is to protect you in case people hit you and they don't have coverage, or more likely they don't have enough coverage to fix you up. And that it's going to cover your medical bills, your rehabilitation, your work loss, your pain and suffering.
He had 3 surgeries from that.
So, and I got a really quick one. My client driving down the road, next thing you know, they wake up in the hospital 2 days later because someone had run a red light, creamed her. They did have insurance, but it was the state minimum coverage, $25,000.
Right.
She had a broken neck. She was in the hospital for weeks. She was out of work for months. The other person's insurance paid $25,000. Her insurance paid $223,000 from her underinsured motorist coverage. In a place like Colorado, where we run about 16% of folks don't have insurance at all, but out of the other 84%, roughly half carry state minimum coverage.
Oh, I did not know that. Okay.
So if you're hit by somebody and they don't have enough insurance to fix you up, your uninsured motorist coverage fixes you. So,
Crazy.
All right. The other side of that is your liability limits.
Right.
And we're talking about on your car insurance coverage. So, Brian, what does your liability limits do for you?
Your liability limit. So I'm driving down the road, collision with Rob. I just hit him again. He is injured because I popped his door, right? My coverage, my liability coverage, bodily injury will pay for his injuries up to the policy limit.
That's right. So if you hit someone in a car accident in certain states like Colorado, where we are a tort state and an at-fault state, meaning whoever causes the damage pays all of the bills, then you have to pay to fix that person. You have to pay for their medical, rehab, work loss, pain and suffering, right? And pain and suffering is kind of the big one because pain and suffering is usually a multiple of other expenses.
Right.
So if you've got somebody out of work for 3 weeks, well, there's going to be a multiple of that for the pain and suffering. The only thing that happens is if you don't carry enough liability coverage, then your insurance company will stop paying, but you have to keep paying. Right?
That's always a possibility. That's right.
So in Colorado, Brian creams me, I'm hurt, and he doesn't have enough liability to cover all of my expenses. Colorado courts can then come in and say, Brian is responsible and we're going to garnish his wages to cover the rest of those bills.
I don't get paid, so
it makes it easy for you.
Does.
Yes. If you have uninsured motorist coverage, they'll pay me, but then they will go after, the insurance company can go after Brian to collect those back. So the most important part of your auto insurance is not the comprehensive and collision. It's the liability coverage, because you could be on the hook for hundreds of thousands of dollars. Right? So the largest liability claim that I've ever seen actually was a client's 16-year-old son driving back from a ski trip with some friends. Inexperienced driver, roads were slick, did nothing intentional, but lost control, crossed the line. Unfortunately, the 16-year-old son died in the car crash, but he also killed someone in the other vehicle and put a few other people in the hospital with critical injuries, right? You are responsible as the parent, because it was a part of your policy, for all of the expenses that come of that. The liability from the insurance company that got paid out was close to $1.5 million because they had the right liability coverage. Had they not, the parents could have been responsible for that.
Totally bankrupt.
So horrible. So, okay, that was liability. I want to talk about on the car insurance side of things, a few discounts that people should pay attention to.
Let's bring up property damage liability, because that's another big one.
Absolutely.
Most people only carry $15,000 on property. Think about the value of your car today, and if it was totaled.
What would it take?
hit you, and what would it take to replace your car? $15,000 is nothing these days.
Most cars nowadays are in the 20s, but really 30s, 40s, 50s, and 60s.
Oh yeah. I'll give you another great example. My truck for pulling the horses and the pigs and stuff around is a 97 F-250. diesel. Okay. 103,000 miles on it. I just for grins, Saturday, I was looking at stuff. Those trucks in Colorado, it go from anywhere from $15,000 to $20,000.
Yeah. And that's for a 97 truck.
Yeah. And if you hit me, you may not be able to replace my truck with the state minimum coverage.
Yeah. So property damage liability, you should have, well, and this is all liability. You should have at least double the state coverage or triple or quadruple.
Yeah. Well, look at the value of cars.
coverage.
I always do $100,000. That's my minimums in my office.
That is the minimum here as well, because what happens if you hit two cars?
Right. You have to pay for both.
You have to pay for both. And if you don't have enough liability coverage on your insurance, that just means your insurance company's off the hook, not you.
That's right.
Right. So, okay. So thank you for bringing that up. So it's important to have the proper liability coverage. And if you increase your limits, I mean, it might cost you an extra $10, $15, $20, $25 per month, which sucks. And it's no fun to come up with that, but that's way easier to come up with than an extra $100,000 in a really big claim.
Let somebody else pay for your mistake.
So that's right.
That's bad to say was true.
It is true,
Yes.
but you are paying them to assume that risk. Since we're talking about auto insurance, let's talk about a few discounts and ways to lower your premiums, right? So first thing, I encourage most folks to raise their deductibles a little bit. You know, from $250 or $500 up to $750 or $1,000, which again, it's no fun to come up with an extra $500 on your deductible, but that's easier to come up with than an extra $50,000, right? So raise your deductibles to lower your premiums. Yeah. Use that money to increase your liability.
That's right. And always look, every couple of years, take a look at the car that you drive and see what the value of it is. Like my 97 truck, I still carry comprehensive and collision
because
deductibles.
It's worth close to 20 grand.
I didn't realize what it was worth. Yeah. I didn't know it was that much, so I still carry that coverage.
Yeah. All right. How about the multi-car discount? You know, if you have a chance to, I mean, if you get married, and I come across this clients who get married, they move in together, but then they keep their car insurance separate. Multi-car discounts worth 25% on the cars. So you're going to save a lot of money by combining things.
And you're saving on the uninsured motorist bodily injury coverage, at least in Colorado, because it's only charged on one car.
So that's right. So if you can combine cars with a significant other, you should.
Yep.
You should also combine your policies together. Whoever does your auto insurance should do your property insurance because you're going to get the bundling discounts, right, by doing those. So you always want to combine those. But also a good student discount.
Oh, my kids, are you kidding? I'm going to have 4 teenage drivers. I've got one right now, another next year. They will have the good student discount. Oh my, is huge.
It is a humongous discount. And that works if you're in college as well.
Yeah.
Right. So good student discount. And then as you get older, if you're over the age of 55, a defensive driver discount is another significant discount. So, okay. That's it for auto insurance. Let's talk about renter's insurance because that's what started this conversation, right? Now, this is just something to know. If you go to your auto insurance provider and you add renter's insurance, the discount is typically so big on the car insurance, it almost pays for your renter's insurance.
It does.
Right? Yeah. So there's no reason not to have it. You know, but renter's insurance, the most important reason to have it is not because you own things. That is important, right? If you've got laptops and TVs, but far bigger is the liability coverage.
That's right. Yeah.
Right.
I left the stove on.
I left the stove on. Yeah. You didn't do it on purpose.
Yeah.
Right. In fact, most things that insurance covers aren't because you did them on purpose. That's why they're called accidents and not on purposes. Right. But if you leave the stove on, now your landlord, if you're in a single family home or a condo or your apartment complex, they're going to have insurance. But again, if you do the damage in the state of Colorado, right, you're responsible for the bills.
That's right.
You know, so they might have coverage to fix the house, but guess who that insurance company is going to want to pay them back? You. Right.
That's right.
So liability coverage, I always recommend at least $300,000.
At minimum.
Minimum.
Yeah.
You know, and I see clients come to us all the time. They've got $100,000 of liability. To go up to $300,000, it's like $1 a month.
Yeah, no, it's super cheap.
Right? To go up to $500,000, it's like $2 a month or $1.50 a month.
Crazy inexpensive.
Yeah. So you don't necessarily need renter's insurance if you don't have anything, but even if you don't, you still need renter's insurance.
Yep,
right?
Absolutely.
So that is the liability coverage. Another thing about renter's insurance is that it has medical coverage for your guests.
Yes.
Most policies come with $1,000 for about 50 cents a month.
Oh,
You can max that out at $5,000. And I have a really quick example on why that's important. Client invites a friend over to put new trim around their main
Is this a
level.
real story?
Real story. Okay. Put trim around their main level. The guest is out in the garage cutting the trim. He somehow cuts off his two middle fingers. I don't know how he missed his outside fingers, but he cut off his two middle fingers, right? Horrible deal. It costs about $4,258. That's what it cost this client, right? They lost a finger and they saved a finger. And that's what it cost, was $4,258 was his out-of-pocket expenses. Well, our client's medical coverage covered that $4,258. That's medical expense.
Yeah, when Sydney broke her, I can't remember which arm. She's broken both arms. My youngest daughter, she was at a friend's house doing front flips off the arm of the couch, broke her arm, and their med pay paid for the deductible on the health insurance.
That's right. So your renter's insurance will cover your guest's medical. Then in that same story that I gave, this did not happen, but had that person then sued, let's say they were a professional guitar player, right? And now they can't do it. Well, then they're going to sue. Well, then your liability kicks in. So it covers you for so many things. People getting hurt, you burning the place down, liability insurance and medical coverage is why you carry renter's insurance.
Yep.
So, okay. Something when it comes to condos and townhomes that is important.
Loss assessment.
Loss assessment. You
Huge,
nailed it, right? Talk about loss assessment.
So loss assessment is, so you don't own the outside of your condo for the most part. There are still some places that make you do that. But let's just say that you don't. We cover the interior on your dwelling coverage. But loss assessment, the hailstorm comes through Colorado Springs because Colorado Springs gets more hail than we do.
We get a bunch.
Denver.
That's right.
All right. And the roofs are damaged on the entire complex. Your association can come and say, Robert, you owe us $5,000 for loss assessment to help cover the deductible for the replacement of the roof.
That's
the
right.
insurance company will come in and write that check.
That's right. So if you have loss assessment coverage, it is going to cover the things that are assessed to you from your HOA.
From a covered claim.
From a covered claim.
Yes.
That's right. If they just decide they want to paint the houses from pink to blue, that's just a maintenance
Blue to
thing
pink.
or whatever it is. That's right. So, but loss assessment coverage, you should have at least $10,000 minimum because we're finding $15,000 assessments now.
We do $25,000 for everybody now.
Yeah, I'd say, minimum $10,000 loss assessment coverage.
Yes.
By the way, that'll cost you a whopping 50 cents to $1 a month.
Well, $25,000 is only $8 a year.
Yeah. All right. It is so well
insane.
worth it, right?
Yes.
So, okay. And the hailstorm on the roof, that was the exact same example I was going to give. So yeah, absolutely. All right. I wanted to talk about home insurance real quick. Okay. One of the things that we hear clients saying nowadays is I need to increase my home insurance because I could sell my house insurance or sell my house for $500,000. What insurance companies care about is not what you could sell your house for because they're not going to buy you a house if yours burns down.
Market value is not included.
No, they're going to rebuild your house, right?
The other thing that's not included is land.
You're still going to have the land. You're still going to have the driveway.
And you're going to have the market value.
And you're going to have the hot market value.
That's right.
Right. So in Colorado Springs, where we're appreciating at ridiculous rates, when you're getting a 10% appreciation on your house year over year over year, it doesn't cost that much to rebuild your house.
That's right.
So you need to insure your house for what it costs to rebuild, not what you could sell it for.
That's right.
So, okay. And then I wanted to talk about a few property discounts as well. We've already been through 9 of 11 things.
We have.
Yeah, that's crazy. The multi-policy discount, and I already brought it up once.
Oh, yeah, the multi-policy. I was thinking of something else.
So, wherever you can insure your auto and your home together, you should try to insure it together.
Yes.
You're going to get some great multi-policy discounts in the realm of, a range of 10 to 20%.
Yeah, it's huge.
Right? So they're excellent discounts. And then you should also ask about, are there extra discounts if you combine even more policies?
You can.
Right. We know some companies will give you a discount for adding a third piece of business.
Right.
Life insurance, retirement plans. So it's worth asking, are there more bundling discounts available?
Always worth asking.
Yeah. What about other home insurance discounts? Any
my
come
favorite,
to mind?
now that you live in Colorado Springs, is the hail, brand new roofs.
Yeah.
And the type of roof.
The type of roof.
So what we like to do with our clients is we always recommend is a class 4 impact rated shingle for hail.
Yes. So a class 4 shingle compared to a regular shingle, the statistics for Colorado is we replace a regular roof, a non-impact resistant roof, about every 7 years. But a class 4 hail resistant roof, it's in the range of 21 years.
Oh, that's
so
nice.
It's going to last 3 times as longer. And because of that, what do you think your insurance company does?
Lowers those rates for you.
That's right. Because they're going to have to replace your roof a lot less often.
Yeah.
Right? You get a humongous discount for doing that. Another one is if you update your mechanical systems.
Furnace.
Yep.
AC units.
Yep. All right. So those were the things that I wanted to go through as far as coverages and discounts. But to wrap this up, just some pieces of advice that I want to give everyone. Number 1, you should do an insurance review every 1 to 2 years.
Things change.
Yeah, absolutely.
You may update your bathroom.
You may add a new furnace.
That's right. Or rip out your kitchen.
So you're doing that right now.
Yes.
You might put a new roof on. As your needs change and your coverage needs to change with it.
Yeah, absolutely.
How do people know? How does your insurance agent know if you don't do a review and tell them what you've got going on with your life? And you might qualify for extra discounts now that you didn't a few years back.
And because of the housing market and the stock market going crazy, your net worth is going up, which then you need to increase your liability coverage.
Right. One other thing that I want to point out is that, every insurance company has their own idea of what their best client is. And one company might view me and think I'm their best client. Another company might think I'm their worst and think Brian is their best client. Right. So if your insurance company doesn't seem like they're giving you the best rates, then you need to check around from time to time. Now, I don't think you should do it every single 6 months or a year, because you get loyalty rewards for staying with insurance companies for longer. But just know that not every insurance company views you as their ideal client.
That's right.
So, okay. There are a heck of a lot more things to talk about when it comes to insurance, but we kind of went through the foundational coverages and things that you need to make sure that you check on in your own life to be properly protected. If you're going to work to build assets, you need to work to protect those assets as well. That's the bottom line.
Yeah, absolutely.
So, all right. Brian, I know no one likes paying for insurance, but like I said, I love what my insurance policy does for me. It transfers my risk over to my insurance company for a lot of big payouts. All right. I think that's it for this episode, unless there's anything else you'd like to add in.
Nope, that's it.
If you'd like to set up a complimentary 20-minute discovery session to talk about what you've got going on in your own life and how you can create wealth for the future, please reach out to myself or Brian. You can do that by calling the Springs office, 719-685-8585, or the Denver office,
303-996-7778.
Or if you want to send us a question, send that to questions@yourmoneypuzzle.com. We'll love to get those answered for you. Thanks for hanging out with us this week. I hope you feel a little bit smarter than you did when we started. Now go out there and have a great week. Do something fun and do something to improve your money puzzle. Your future self will thank you for it.
Registered representative of and securities offered through Securities Management and Research, Inc., SM&R. Member FINRA SIPC. Investment advisory services offered through BFC Planning, Inc. Edgen Insurance and Financial Services, Johnson Financial Services, SM&R, American National Family of Companies, and BFC Planning are independent entities. There are risks involved with investing which may include market fluctuation and possible loss of principal value. Particular investments may not be suitable for certain situations. Carefully consider the risks and possible consequences involved prior to making an investment decision. Our firm does not provide legal or tax advice. Be sure to consult with your own legal and tax advisors before taking any action that may have tax implications.